Welcome to Stories with Soul. I am your host, Jamey Ice, musician turned entrepreneur and co-founder of 6th Ave Homes and 6th Ave Storytelling. Over the past 10 years, I have launched multiple successful businesses and have become obsessed with all things entrepreneurship and marketing. I've been on a personal quest to unpack what it takes to make and grow a great brand. One thing that I've discovered is that stories are powerful and that storytelling has the power to set a brand apart. Join me as I dive into the stories of the heavy-hitting leaders, entrepreneurs, artists, and business owners in our community to hear their biggest wins, greatest losses, and their best business secrets. There's a story behind every great brand. Welcome to Stories with Soul. Stories with Soul is brought to you by my company, 6th Ave Storytelling. In 2020, we launched a marketing company on a mission to encourage entrepreneurship and make starting and growing a small business easier than ever before. Since then, we have helped hundreds of small businesses and entrepreneurs grow their brands by giving them the tools, resources, strategy, and support they need to craft and share their stories. If you are thinking about launching and growing your own brand, schedule a meetup with me today. I would love to talk to you. Head over to 6thAveStorytelling.com and let me show you how the storytelling approach can transform your marketing strategy. Welcome to today's episode. This is honestly a conversation I've been wanting to have for a long time. I feel like we just met recently, but I've been a fan of yours for a long time. I have Rusty Reid joining me, who is probably you have done a ton for Fort Worth. But he is, I'm going to read the bio, but he's the CEO of Higginbotham. And you were named president in 1989, which that's probably going to be where I'm going to start.
Young pup, 27 years old.
I want to dive into how that worked. But at which time he implemented the firm's single source service platform where customers could obtain insurance for all financial services under one roof. You also spearheaded the adoption of Higginbotham's employee ownership structure, where essentially all employees got to own pieces of the firm. You have grown it from 12 employees to it's now one of the nation's 20 largest independent firms in the whole country. How many employees do you have now?
We're knocking on the door about 3,000.
That's so crazy.
Isn't that nuts?
That's so crazy. So just celebrated the 75th anniversary of the firm, and just Higginbotham is now a Fort Worth institution. You began your insurance career in 1983, joined in Higginbotham in 1986. You are also very involved in the community. I have a big list here of all that you have your hands in. You're a member of All Saints Episcopal Church. You're the trustee and chairman for All Saints Episcopal School. You've served as the board member and past chairman for Casa Mañana, an executive board member for the Davy O'Brien Foundation, past chairman of Fort Worth Young Presidents Association, current member of World Presidents Association. You're a board member of Goosehead, which is also a massive, one of the biggest insurance companies in the country, member of Rivercrest Country Club, the Fort Worth Exchange, trustee for TCU, a board member for the Council of Insurance Agents and Brokers. I don't know when you sleep.
A little busy, yeah.
A little busy.
I'm getting tired just hearing about all this.
But you appeared in Dallas's 500 list. You were listed in the Hall of Fame of Insurance Business America. You were named the top private executive by the Fort Worth Business Press, one of the 25 most admired CEOs by the Dallas Business Journal, the Chamber of Commerce Executive Leadership Award. You were CEO of the Year at the Insurance Business America program. Just a lot. Just heavy hitter. I'm excited to dive into that story. And then you have been married to your wife for 38 years. We were talking about that. To Molly, you have beautiful kids. We have had Sainty Nelson, your daughter, on this program. So Rusty, I'm thrilled to have you on here. How does that feel, just hearing all that?
I'm tired. I need to go take a nap. I mean, my goodness.
That's awesome. So where I want to start is you got into insurance in 1983, but then you became president of the company in 1989. So you were still in your 20s.
Mm-hmm.
How did that happen?
Well, kind of a fun story, actually. It's funny when the big joke in our family is I turned 60 last year, and now I'm 61. But when I turned 60, I referred to I'm 40 again, right? And my family just laughs about all that. So it's hard to believe I've been around this long. But long story short, going way, way, way back, kind of maybe to the beginning, kind of an interesting thing is I went to school at North Texas and originally started off in pre-med. And if you're in pre-med, it's very heavy in science, it's very heavy in math. I did really well in both until I get to organic chemistry, which is kind of it kind of weeds out folks, if you will. And shockingly, I did well, but I literally didn't understand how I did well. And so I remember I went to our biology dean at the time and said, hey, I'm kind of at this crossroads. And it was very interesting how he led me to do what I ended up ultimately doing. He said, listen, kind of just go through your family and explain, what they've done growing up. And I said, well, I'll start with the Reid side. I said, my grandfather Reid was insurance. I said, my dad is deceased, but he was insurance. My grandmother on my dad's side was in retail. And I said, if I flip to go to the other side of the family, my mother's side, my mom was a psychologist, a therapist, and her mother was a homemaker, but her father was advertising. And he literally goes, you need to go across the street. You need to meet Dr. Thornton. They have a business program, but underneath that, there's finance, there's real estate, there's law, there's marketing, and there's insurance. And so I followed his lead. I mean, I'm a young kid. I don't really know what I'm doing, candidly, and go across there. And I began to major in business and study in insurance. Well, one of my fraternity brothers, Ed Coker, came to me upon graduating and said, hey, I know you're putting yourself through school. There's an opportunity to go work for Ramey King and Menace, which is what he had been doing. You kind of take morning classes, but you work from 1 to 5. And so that's what I ended up doing. And wonderful man, Terrell King was my mentor there. And upon graduating from North Texas, I basically had 3 job offers lined up and asked him, what would you do? And he said, go work for American General under J.D. White in Houston. So I just followed his lead and kind of started there, got transferred to Fort Worth in, I guess, mid-July 1985, which I was real happy about. J.D. knew I grew up in Dallas.
So you're from Dallas?
Originally, yeah. Okay. And so he was like, I know you want to probably get closer to home. Fort Worth's not home, but it's close. And it was kind of funny. His parting words to me were, if you screw it up, I'm going to transfer you to Baton Rouge, which I now have a great firm and partner in Baton Rouge, so it wouldn't be bad. But, when you're young and you're wanting to get close to home, that kind of gave me the writing on the wall, do well. And so I had the great fortune of building out this market for American General. And in that process, I met a wonderful man, Bill Stroud, who was the nephew of Paul Higginbotham. And so December of 86, he hires me as the 12th employee, and that's how I got started. I was 24 at the time. So
you're this 24-year-old kid.
Yeah. Oh,
Insurance is in your blood, though.
Yeah.
Whether you wanted to do it or not.
It's really interesting, Jamey, because if you kind of look at our firm, we've got a number of folks that my age and younger that's parents were actually in insurance, and no different than it probably is as a musician. You end up having musical talent in your family, or acting, or doctors or lawyers, et cetera. And so it's really interesting when I look at some of the lineage in our firm. We've got a lot of people that parents were either on the insurance company side, or actually had parents that were insurance brokers, and then now roll the clock forward, here they are as well. Mm-hmm. I'll assure you, when you go to if you're a senior or a junior in college and you're going to the jobs fair, there's not these long lines in the insurance side of the equation, but it's an incredible industry to be part of. It's very interesting for me when we hire people all the time, and they come in from. We've had professional, baseball players of late. Sean Tullison, who was a pitcher for the Rangers, just joined our organization. I mean, we've had all kinds of folks from all kinds of industries, and it's kind of that aha moment when they join us. They go, oh wow, had no earthly idea, that this is what this industry is all about. So, I've effectively had 2 professional jobs. American General, Higginbotham. I don't know any better, but it's certainly been good for me and my family.
Yeah, for sure. And so 24, And were y'all married at the time? Were you married?
No, so we were, I think, engaged. I forget when we got engaged, but Molly and I got married November 29th of 85. So
85, so like
I got transferred July of 85.
Okay.
We were at that point already engaged, and then we got married that November.
And did y'all meet? Y'all met in college?
Yeah, we met in college. Kind of a cute story I'll share with you. So back to Ed Coker. He likes to, if you met Ed, he likes to take a lot of credit for any of my success,
Okay.
be it personal or otherwise. I'm great friend and partner at Higginbotham today. But
And y'all have been friends and partners
oh yeah, forever.
since
Yeah,
college.
he was the president of our fraternity when I went to North Texas, and there was a group of us from Hillcrest High School that all joined a fraternity called Theta Chi, and Ed was the president at that time. And it's funny, they called us the Hillcrest Cupcakes. Where they came up with that, I have no idea. But
It needs to go on a shirt.
that's right, exactly. But
This episode is sponsored by the Fort Worth Business Press. As a Fort Worth entrepreneur and small business owner, the Business Press is my favorite source for news and updates about the entrepreneurial community in and around Fort Worth. I read their email newsletter literally every day. It's always full of insights and stories that really matter. Are you ready to be more connected? Sign up for their free newsletter at fortworthbusinesspress.com. But if you're like me and the newsletter just isn't enough, you can become an insider. With the code STORYTELLING10, all one word, you'll get a discount on the Insider membership. Insiders receive exclusive access to special content, 24 issues of the Business Press delivered to your door each year, and discounts on event registrations and more. Join me and the Fort Worth Business Press in staying up to date on the people, companies, and issues that matter most to Fort Worth.
funny story. So our fraternity every year would have a luau party.
Mm-hmm.
And we'd always invite our sister sorority, which were the 80 Pies. And Molly was a year younger than me, so she was a pledge at 80 Pi. And at the end of the evening, we'd transform our whole backyard. I mean, you hear these stories. What happens in our case, it wasn't a huge backyard, but we'd put a river through it and put bridges over it, and line the fence line with bamboo and whatnot. And so anyhow, at the very end of the evening, I've got my arm around Ed Coker, and I pointed over at Molly, and I go, "You see that girl over there? That's who I'm going to marry." And of course, this was in.
And had y'all talked?
No, a little bit,
Okay.
a baby bit, and but this was circa 1981, and roll the clock forward 4 years later, we get married, and here we are, almost 38 years later. I guess she's still putting up with me, so lucky me for
30
sure.
years, that's amazing.
Yeah,
that is a special thing that is it's become rarer and rarer these days.
I know. It's
So is that so, like, are you that type of person that it's like, see that's where I'm going?
yeah, it's funny. I really do kind of, they laugh at me in our firm because for years, I've kind of put a stake in the ground and said, that's where we're going to head. And normally, and my partners now, because we've done it for so many years and we've exceeded our goal, now they claim I'm sandbagging. I'm like, guys, to grow 20.4% a year over year for over 3.5 decades, there's no sandbagging in that. That's always a stretch. There's a lot of thought that goes into it. But I am kind of that guy. I think about, trying to identify clients that we really want to go after. We'll put our sights on them, and come hook or crook, as I like to say, we're fortunate enough to maintain them. If we have, great people within our organization, I do kind of the same. It's funny, I do a lot of volunteer work now, not necessarily on that front. I go, hey, I want to be part of that or be part of that. It kind of seems to land in my lap a little bit, I guess, early on. On those types of things, you get asked, and once people see, not only do you get involved, but you really engage and aid in their effort, whatever it may be. You kind of get asked again and again and again. I guess I'm bad at saying no, maybe, but anyhow, it's always kind of been my, get something in my sights, and I go pretty hard.
You go hard.
Yeah.
I would assume so.
Yeah.
I would assume, but so that story of like that she's gonna be my wife.
Oh yeah.
My assumption is that is also in line with how you have run the business. So you're 24-year-old kid, fresh out of year or two out of college.
Yeah.
How do you become president in 5 years.
Yeah, I mean, well, even less than that. I guess it was 86, so 3 years later.
3 years later.
Yeah. So it
Were
was
you just really good?
Yeah, well, I don't know. It's so funny. I can shut my eyes and recall so many conversations Bill Stroud and I had through the years, all really good. I mean, again, a wonderful, wonderful man. But it was interesting. When I came into the company, they had what was called these underwriting programs with two different companies. And basically, he said, "You're going to run these." And it was interesting. We recently, Higginbotham hosted an event with my dear friend Mike Berry in Hillwood, where we had the founder of Folds of Honor come in, Dan Rooney. And he kept reciting this thing, you go before you're ready. And I think Bill had that intuition about, hey, here's a young man that I'm bringing into the Higginbotham family, and he's just ready to go before he's ready. Mm-hmm. And, I really did. I mean, I had these two programs that all of a sudden kind of I'm responsible for, and it wasn't candidly much after maybe 6 months to a year. Bill loved to travel, him and his wife, Lou. Loved to travel, and he more and more kind of would hand me a little more responsibility, and keep in mind we were small. I mean, when I joined, we had 12 employees. We bought the business. We had 24 employees, and I'm sorry, I'll keep probably intertwining some funny stories along the way, but I remember when we bought the company, we bought it through an ESOP, Employee Stock Ownership Plan and Trust, which made all the sense in the world because, if I was the 12th employee and called Bill the first employee, there was kind of 10 other employees that really were there before me. And I've always been a big fan of you, dance with the ones who brung you. And so the ESOP structure
that's a good quote.
The ESOP structure was so great because it allowed us to really share equity amongst those folks that had built the firm to that point. But the other thing that I saw when I was with American General, oftentimes if you didn't have equity, you'd pack up your bags and become a competing firm. And so I thought, okay, how do we retain those that we have? But more importantly, how do we keep and recruit people once we get on this bit of a roll? Mm-hmm. And so, the ESOP structure just nailed it for us. But back to kind of a funny story along those lines. So I remember in the transaction, there were basically two people that had to guarantee the note. It was me and Bill Stroud. Well, Bill Stroud was getting the proceeds, so he had something to pledge as collateral. Mm-hmm. Me, conversely, Molly and I still at that time, I think, were renting an apartment. We had a Volvo, but her father co-signed. I mean, I had zero, if you will. Right. I had my name and kind of my name only. And here I am co-signing on a loan for $1,668,332. And I remember.
You remember the number.
I remember the number. Oh, yeah. And I remember Bill Adams, who at the time was a banker with First City. And Bill, I remember looking at him going, now, Bill, why in the world do you want me to sign on this note? He goes, because if you default, I'm going to own you for the rest of your life. And I thought that's plenty of motivation to make sure not only we default, but we maybe accelerate and get this bad boy paid off early, which is what we did.
So when you say we bought the company, like in
an ESOP structure,
the 20 of y'all?
Well, really only me and Bill were financially at risk, but the facts of the matter are in an ESOP structure, what ends up ultimately happening.
ESOP means
pardon me?
ESOP means
it's an employee stock ownership plan and trust, and it's not to get too complicated, but it's an ERISA vehicle that allows you to effectively do a leverage buyout, and as you pay down the debt, what happens is the shares get released, and they get released formulaically to all employees. So the facts are the matter that once we started paying down the note, we all became shareholders. And once you're a shareholder, now if the company didn't do well, then your value would go up in smoke. So hence why I always say we bought the company, because really that first payment we made.
Who thought of that?
Well, it's a great question. So
How did you come up with that concept?
We explored. Oh my gosh!
So the owner comes to you and says,
Well,
I want you to have it.
Really, Bill Stroud had made the decision that it was time for him to kind of monetize his lifelong investment of Higginbotham, because he bought it out from his aunt Edith Higginbotham in the mid '60s. I think, if I remember the story correctly, Paul Higginbotham finds the organization 1948, hence our 75th anniversary. Bill comes in the early 60s to basically be Paul's succession plan. Paul ends up with cancer, dies early. Bill's left with the decision, do I be partners with my aunt or buy her out? And he buys her out.
And is this the same as like the Higginbotham store?
No.
Okay, so
great question. We get asked that all the time. No relationship at all.
Okay.
But anyhow, Bill, once I'm kind of really running the company, and I think he at that point was, and I'm probably pushing the envelope, hey, I want to do this, want to do that, and I'm sure he was saying at the time, okay, young stud or buck or knucklehead, if you want to do that, you need to buy me out, and then it's yours to do it.
And was that on your radar? Like,
yeah, I was kind of like
I want to be boss.
I was like, I had a vision of, really not just being a small agent within Fort Worth community, but I again, kind of those stakes. I thought, we've got the ability to really build not only the largest, but all likelihood, maybe one of the best firms in Fort Worth, right? And so
you thought we were going to be the largest in Fort Worth?
Oh, no doubt. No doubt. Yeah. Because
even though you only had like 12 employees.
Yeah. I just knew that we could get there. And a lot of it was just around, the atmosphere at that time. We knew who the larger players were. I knew, again, I'd worked with some of them.
And you're like,
I'm when I was with American General. So I knew kind of what was great about them, but also maybe some of their weaknesses. And so, and I really believe two things. Number one, if we kind of, put a client in the middle and really provided them products and services that supported them holistically as a business, we would do quite well, hence our single source model. And then I also believed if I was going to not only keep who I have, but attract and retain really great talent, I used to always say, find the best and the brightest. The way I'd be able to attract them is with equity, which was much different than traditional models. Traditionally,
was anybody doing that?
Not really. We were a bit ahead of our time in that regard. And so, the ESOP model, and we explored, that kind of landed in our lap, truth be told. I mean, there was a guy named Ron Lent that worked for Weaver and Tidwell at the time. He was a consultant here locally in Fort Worth, and the ESOPs were just starting to emerge. And for a professional services business, I mean, it was spot on. Mm-hmm. It enabled you to transition ownership from maybe a single owner or a group of owners to all employees, which, in our business, the assets go up and down the elevator every day, right? And so it was just, it's not like we had this, building we were trying to acquire or this manufacturing plant. I mean, it was a people business. And so as we explored going down to Bank of Commerce and me co-signing on a note and transitioning the business there that way to maybe trying to go raise outside capital, this just literally was one of those scenarios perfect for what we were trying to do.
When you got presented with that, you're like, that's it solves a lot of my problems.
And it was great for Bill. A lot of wonderful tax benefits for him. It was great for the company, the structure by which we paid back the debt. We got to deduct principal and interest because it was called a distribution. I mean, all these nuances that when the dust settled ended up being great for us.
Yeah, and it kind of shaped y'all's career.
It really did. I mean, we looked up, and I'm a big fan of differentiation. And so two things that it would enabled us to do is, we became a completely wholly owned business by all employees. And it also helped us really build out early on. One of the business lines we weren't in was employee benefits. And it now enabled my two partners, Jim Hubbard and Michael Parks, to really start building that business out. Not only gave them a lot of incentive because they now were owners, but it also allowed them to attract and retain a lot of great people that weren't with the business at that time.
It was a motivator.
Huge motivation.
You now got skin in the game.
That's right. Which candidly, Jamey, I mean, here we are today. It's the same song's second verse, or maybe now third, fourth, 100th. I don't know, but it really is.
Motivator and attractor. Attracting
big time.
Better.
Yeah, all the time we've got folks that are working for maybe some of the larger national publicly traded brokers, and those are great organizations to work for, but they don't typically get equity. They kind of get maybe traditional stock options once they get to a certain level. But in our firm, I mean, for me as the chairman and CEO, down to the receptionist at every office, have opportunity to have skin in the game. And I can tell you, it's interesting. I was just with our chief operating officer, Mickey Shepard. We have a managing partner meeting once a quarter, and he and I were sitting next to one another, catching up on a whole lot of things. Being a little disruptive sometimes in those meetings. They're like, would y'all, be quiet over there in the corner? But it's very interesting. He said our turnover, both voluntary and involuntary, is only 7%. And I was like, well, how does that compare? And he goes, well, if you look at just all businesses in Fort Worth are like 11 to 12%. Our industry is higher than that. So, it proves kind of in the pudding. And then we recently were named one of the best places to work in the industry by the Insurance Journal. We've had a number of wonderful accolades. You were reciting some of them earlier. And I just think it's, first and foremost, the vision of Higginbotham for our employees. If you just look at our mission, vision, and values, is the mission is to exceed expectation of our employees. Our vision is to be the best place for our employees to work, and our value says to be family to our employees. And so, you have to really believe that. You have to also live it. But if you just think about the employee ownership component to Higginbotham, I mean, we're setting people up not only to have a nice living, be able to earn a nice living wage. I always say it's about cash flow on the front end, but it's also about what do you have to retire on the back end. And our stock ownership has really enabled us to be able to provide both to our employees. And so if you go back to, does that exceed an employee's expectation? The answer is absolutely. You don't have that opportunity in all businesses. And, if you think about, well, how do you measure that? Certainly retention is one way, but when you get these nice accolades, that's another bit of a validation that you're going down the right path.
Mm-hmm. So, okay, I want to pause you there because so I actually wrote this down. I found this in like an article from, I think, 2016 or something, your mission statement. I was going to ask you about it. So I think the first thing I want to point out is one, you just spouted that out without reading anything. You know that by heart. A lot of companies have core values or a mission statement. It's on a piece of paper on a wall somewhere.
Yeah.
Nobody knows what it means or what integrity. It doesn't. It's not really a thing. But you can tell that is a framework or a truth or a guiding principle that you probably say a lot and you probably think about a lot. So one, I think like great leaders have a clear vision of here's who we are, here's what we believe, here's why we do it. People buy your why. So I want to point that out. And then two, that also like reinforces, see that girl over there? That's my wife.
Yeah.
You have a very clear stake in the ground. Here's what we are going to do.
Yeah.
This is our vision. This is our mission. And the third thing that I think is really interesting is the customer is nowhere in that. Your mission is to exceed expectations for our employees, not our customers. Our vision statement is to be the best place for employees to work, and our value statement is to be a family for employees. Like that's very counterintuitive for a business because businesses are about making customers and making money and making profit. And this is like, we want to take care of our people. Who came up with that? Are you a small business owner or an entrepreneur? Do you do marketing for a small business? If so, I have something that I want to give you, and it's totally for free. We've put together a free resource at 6appstorytelling.com/download, and it's the secrets, it's the tips, it's the tricks, it's the tools of the trade. It's literally everything we do at 6app Storytelling to help small businesses grow. Go download it today at 6appstorytelling.com/download.
Well, yours truly.
Okay.
Now, I can tell you, I have a wonderful lady that's been with us a long time, Christina McGee. She's one of the best writers I've ever found. So I can come up with these great thoughts and ideas, and boy, she can put pen to paper and make it look pristine. But, in fairness, it always, in our mind, and in my mind, it's always started with employees first. Without my employees, I don't have the service to provide. I don't have the relationships with our carriers to maintain, and I don't have the wherewithal to give back to the communities that are so great to us. So, in fairness, both our mission, vision, and values, it starts with employees, then it's exceed expectations of our clients, then thirdly is to be partners with our carriers, and last is to be generous to our communities. But I've always just believed in my heart of hearts that without great employees, because again, our assets are our people. You have to, I say this all the time, you either have to subscribe to the theory that our business truly is a relationship business, or it's not. I really believe it is. Now, technologically, we're way advanced above and beyond our peer group, but it still starts with that employee that cares, that employee that almost has that, servant leader type mentality, if you will. And if you can get that element right, I think everything else just automatically falls into place. And it's interesting through the years. I've read so much stuff. It's insane. But, Jack Welch used to even have kind of the 4 boxes of, employees. And, in one end of the extreme, you have rock stars and people that really buy into the mission of the firm. And the other end, you have guys and gals that might have been rock stars, but they're rogue. They're kind of against things. And he was always saying, get rid of them.
Yeah,
and then
they're producing, they're getting stuff done, but they're not bought into the culture.
That's not bought into the culture, exactly. And so, as we get larger, I encourage our leaders to listen. It takes one bad apple to spoil the whole bunch. And I always refer to Higginbotham as the golden goose that lays the golden eggs for the employee shareholders. And I'm like, take care of the golden goose, take care of the golden goose. And so that's a very much in our world a people dynamic.
That's so counter, I feel like, most business. But you had to have had that realization or that conviction when you took over the company, because you bake that into the way the company is structured.
Yeah.
To take care of employees. And so a large part of your success is culture oriented.
Oh,
like have great people, attract great people, take care of great people. When you do that, that sounds altruistic. It is altruistic.
Yeah.
But it also is the most effective business vehicle you can do as well.
Yeah.
Like it's going to make you the most money.
Yeah. Well, think too, if you got great people that are taking care of great clients, or providing great service to our great clients, then you're going to keep those clients. And then because of your business model and your customer service, et cetera, you're going to be able to add new clients. And then in our case, we don't have to make these ridiculous, we are very profitable as an organization, but we don't have to make these crazy profits to appease some third-party shareholder, because it's our employees. We just want to make a reasonable profit, because that goes back to benefit our employees. And then that reasonable profit makes them very happy, makes them, hence our retention rate is off the charts, good compared to our peer group.
Insurance, where people are kind of bouncing between.
All the time, yeah. Because we feel blessed to be one of the top brokers in the country, but I think people don't appreciate it. There's somewhere in the neighborhood of 35 to 40,000 independent insurance agents and brokers in the country. And for us to be here in not little Fort Worth anymore. We're almost the 12th largest city in the country, but we started here. When we weren't the 12th largest city in the country, and our growth trajectory has been literally phenomenal.
You said 20-something% every year.
Oh, yeah. It's 20.4 is literally our compounded annual growth rate since we launched our employee ownership journey in 1989.
It's the same every year, 24.4.
It's just, it's crazy.
Is that your lucky number?
Well,
when you go to Vegas, 24
I'm not a gambling guy at all, but no, it's funny. So I've got a great partner, our managing director of finance, is a young man named Wes Snow. And Wes is the one that anytime I'm on calls, with the financial markets or capital markets or whatever, he'll always chime in. That's why I have this number up here. He'll always go, oh yeah, and our compounded growth rate is 20.4%, and it's up from 19.6, and it's up from blah 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 blah. So it's but yeah, great. Just Jamey, it's funny. I mean, I think, and I would say this with all my senior leaders in our firm, and for that matter, all. I mean, we don't take any of this for granted. I'm telling you, we're the most. We bleed humility. We're a most humble group. I mean, we're very aggressive. We're very goal oriented. But man, we just pinch ourselves. Who would have flippin' thought this business that we all kind of locked arms in 1989 and said, let's go do this. Mm-hmm. Who would have thought we'd look up, and here we are today, spread across 16 states, over 100 offices, and knocking the door of 3,000 employees. I mean, we just can't believe it. And it's funny. I've had some people say, well, Rusty, if you would have owned 100% of the business like Bill Stroud did, like his uncle Paul Higginbotham did, do you think you would have been able to accomplish this? And I would just unequivocally tell you no. Mm-hmm. It's funny. It's always funny. I always have these things in my head, and I love when I read something that kind of validates it. And I remember reading an article not that long ago, and I wish I had the visual to show you because it really does lay it out. But it kind of stated about growing businesses, and I forget, it was in some management journal. And long story short, it said, do you want to own 100% of a grape or a slice of a watermelon? And I would tell you that's what's happened. I mean, we have this big watermelon, hence Higginbotham, and we all have little bitty slices of it, but it's much greater than that little bitty grape, if you will. And I think in our business, oftentimes, you see people that they build it up to a certain point, and their only option is to sell the business because otherwise there's not a way for them to monetize their their lifelong work. And it when we bought the company, I mean, we were a little company doing a little over $1 million of revenue, and now we're almost $1.7 million in debt. I mean, it's hard for people to, you've got to really believe that you can build and sustain the business to go and take on some leverage to turn around. Yeah, I mean it's a big step forward. I remember Bill used to have this wonderful Bill Stroud used to have this wonderful saying is he'd always go, Rusty, God takes care of children and idiots. I'd always look at him and go, well, we must be a bunch of idiots then. So
that's a great quote.
You have to sprinkle a little fun in with some of the the moments of terror, if you will.
So were you like sign the dotted line? Was it easy? Was it like, I'm assuming now you're like, this is.
Well, I think maybe the benefits of youth is you feel you're a little more bulletproof. Mm-hmm. So it was much easier then. I would tell you it might have been a little more difficult if I was the age I am now, having to, because now you're at the, I always looked at it from the point of view of and the way the structure was, we had 15 years to retire the debt. I mean, it wasn't like it was unrealistic to make things happen, but without growth, we would have had an issue. And that was what we were betting on. Excuse me. I was betting on myself. I was betting on my young partner, Jim Hubbard, that I'd brought in before the transaction occurred. Shortly thereafter, Michael Parks. Shortly after that, Mary Russell. I mean, these people that were really part of the early Hig days, we were really betting on our ability to not only maintain what was an amazing company, but really building it going forward. And I think as you get older in life, you don't it's not about those gambles or bets as much. So I think
But
probably being young was good.
Also you had less to lose. I mean, it's like you didn't have anything to lose.
I had nothing to lose.
You remove, I think
except for the one thing you had is reputation.
Yeah.
Right, and
the people who are counting
100%. The people. I mean, I thought of my Lord. I mean, there was moments. 1990 was a bit of a challenging year for us because we went from a company having no debt to having debt, and we really had to kind of tighten our bootstraps a little bit. In our belts because I think we thought, well, we can just keep running the business the way it had been run, but we had introduced something new, which is debt payments. It's kind of like rocking along and never having a mortgage, and all of a sudden now you got a mortgage. You better, if your spending habits were such that you were spending more than you're bringing in, you got a problem. And it was something that I was able to identify, and we made some corrections that we implemented towards the tail end of 90. And literally, though, from that point forward, many of those things that we put in place are still surviving today. And it's just allowed us to be very fiscally.
What kind of things did you put in place?
Well, just like things like cut out expense accounts and cut out, a bunch of unnecessary salaries and, really just focus on, for those that had the ability to generate revenue, that should be the basis by which they make their earnings, not all these things above and beyond that, because they were going to be employee owners. And so if they, create alignment to fiscally run the business, and if you run the business well, because you have your stock's going to go up, right? And then those that were more on the support and service side, make sure you take better care of them than maybe you were before. I mean, sometime when you run businesses, people get in a little habit of, hey, I'm going to get a little more expense account, or hey, I need to get a little more on the salary front, or hey, I'm going to join this country club and all this. I've implemented policies literally back in 1990 where if you do really well, you should be earning enough where you can go get all those things.
Do it yourself.
But we're not going to run that through the business. That's going to be your personal expense. And it's interesting. You kind of create alignment around, let's focus on what matters most, which is being a fiscally responsible business where we can engage wonderful employees, keep them around long term that will do a great job servicing our clients, do a great job partnering with our various trading partners, our insurance carriers, et cetera. And we put that model in place in 1990, and man, it has served us well for a very, very long time.
It's interesting hearing you've made some of these fundamental principles and frameworks that y'all are still running with. Can you talk a little bit about I'm assuming now is very different. You got 3,000 employees. You are in leadership. But back then, were you producing still? Were you still selling insurance?
Yeah, and I'm still very much involved in many of those elements even today. Now I can't do what I did back then because we're not only do we have 3,000 employees and they're relying on me to make sound strategic decisions, et cetera. And we've also been rather acquisitive. Back in 2007, we kind of launched what we call our Best in Texas strategy, which kind of made us a dual growth business. So we grow not only organically, but also by bringing in new partners in new markets and helping them grow. So I'm very involved in that.
But how were you balancing working on the business and leadership, and I'm leading people and I'm making, looking at the numbers, and I got to go out and sell.
Yeah. Well, it's funny. So
how did you do that?
I kind of figured out on the selling side, I figured out the game for me was more geared around, I'm establishing good relationships with folks. By reputation, we receive a number of wonderful opportunities. But once we pick up that particular client, I'll remain involved more just kind of at a macro management level, but really make sure I've kind of hand it over to a teammate for them to really manage the day-to-day. Okay. And that's really what I've done personally.
Even back then you were able to do that?
I started doing that literally back in the kind of, 2005, 2006, 2007, because we were on quite a growth trajectory. And so it provided that balance. Now, Jamey, that being said, Molly would tell you this is clearly the way I'm wired. I'm one of those guys, you dump all you can on me. I mean, some people, you dump too much on them and they break.
Mm-hmm.
I like when people dump a lot on me, and it gets me to think. I'm a problem solver, and so it's like, okay, good. Here's the challenge. Now, how do I solve for that challenge?
You like running at
100%. Yeah. And I think in our business, well, no different than your business. I mean, I think in all businesses, one of the elements of leadership is to lead by example. And so certainly for those that are in the sales side, kind of the client acquisition and maintenance side of our business, I think it's probably real healthy that I'm very engaged to this day in the acquisition of clients.
You're still talking with the clients?
Oh, 100%.
Really?
Love it. Yeah. And think about it. What it allows me to do is make sure that I've not disengaged from what really matters. And I always say there's two kind of clients. There's some of us at Higginbotham that serve the external client, right? And that's very straightforward. That's in insuring Jamey Ice's business as an example.
Y'all have insured all my businesses for a long time.
And thank you, by the way. And so really there's those that serve, and that's typically those that acquired you as a client, and then there's probably an account manager that helps that producer maintain it during the year. But then there's that other client, and it's those that are serving those that serve externally, right?
Your employees.
That's right. And so I was in our managing partner meeting the other day, and I had one of our colleagues going, but I'm doing this, but. And I stopped him very quickly and said, listen, you're not listening to your customer. You've got two of your customers here that really are looking to you to help solve for some problems they're having to help serve their clients. Listen, modify, adjust, and then, this conversation will go from being maybe a little combative to getting more aligned. And so I just think, and I really applaud our whole leadership team. All of them. I got a young man, David Fischel, that's now in charge of our we call him our new partner strategy, and he brought it up the other day in one of our meetings. He says, really at Higginbotham we're producing executives, and I think that has also helped shape us to a certain degree, but it's also helped us really maintain a leg up compared to our peer group. It's not like we've got a bunch of finance people running the business. Yeah. And that's what happens oftentimes when you're a larger firm. Now, by the way, we're very sophisticated financially, so I don't want to
Were you financially minded? Like, does your brain work that way?
I've always had a little bit of a knack in and around the finance side of the equation. I was never formally trained, but I would argue, I tease people all the time. They're like, well, where did you get your master's and your doctorate? And I said, well, I got my went to business school at Higginbotham, and I got my doctorate at Higginbotham. Yeah. I mean, stop and think about it. Yeah. At age 24, I'm thrown in to run these two underwriting programs that probably normally folks would be in their 40s to do.
And what does that mean?
So basically, we would get an opportunity, and we were like the insurance company. We would underwrite it, we would price it, we'd actually issue the policies for that particular business client. And I was doing that. That was my first.
You're analyzing. Is this?
That's right. You, Jamey Ice, are bringing in an opportunity for us, and instead of us then sending out to the various insurance companies, we were actually their underwriter.
Okay. And you're saying, are we going to lose our shirts on this guy?
That's right. That's right. That's right. And so, and then think about it. It all of a sudden at 27, I'm on the hook for I'm having to run the business, and which is all the financial elements to make sure that not only can we profitably grow, but have enough free cash flow to pay the debt service that we took on to buy the company. So a lot of times you read about that in theory. I remember reading a book one time. It said you can read a book about how to catch a tiger by the tail, or you can actually go out there and catch that tiger by the tail. In my case, I was catching that tiger by the tail. So you grow up very quickly, and you learn very quickly how to really actually do that. And I will tell you, foundationally, that helped me really get a head up on the financial side of things very well and very early.
Were there any moments where you're like, oh my gosh, I have a tiger. Like, were there any like dark nights of the soul? I just caught a tiger. I don't know if I can hang on to this tiger.
I walked through kind of a series of them.
Because it's like on paper we grow 22%. And I know it was not.
Oh, it's not. No, it you know, in life, in particular in business, but in life generally, as you know, you've got those that are the glasses half full and those are the glasses half empty. I think as a leader, you've got to always have an eye towards the glasses half full, but you've also got to be practical. You got to be pragmatic, etc. But you being, you know, positivity is a good thing. And I've been, even though, you know, I came from a family that was, you know, my mom and dad got divorced when I was 9. I lost my dad when he was, you know, when I was literally just graduated from high school. I mean, I've had many dark moments in my life, but I never focused on that. I always focused on what's positive and what's ahead. But no, I mean, 1990, you know, we looked up and we'd lost $100,000, which seems like nothing compared to where we are. But when we bought the company, we bought $300,000 in cash. So a third of my cash, poof, it's gone. It's time to figure out real quickly how to fix that, and we did. You know, if you look at, you know, the 90s, I mean, think about the time in Texas. That was when savings and loans were faulting, et cetera. And we just said, fortunately, our whole book of business wasn't built on savings and loans, but I was like, we just got to keep going. You know, think about the dot-com boom and bust. Yeah. I mean, going through that, we had a business that we were involved in that was pretty much a bust, if you will, and you know, but we kind of managed through that time. You know, we kind of just raised our head, and then along comes the 9/11. Looked up in 2007 and 8, and you know, the modern day depression or the Great Recession hit, and you know, you got banks failing. You know, you had things like Lehman Brothers. I mean, just craziness, right? And then who had in their you know, on their calendar this little thing called COVID. You know what I mean? And so there's clearly been moments that I would say are challenging, but I also, I guess, kind of even my own personal life, you know, a lot of people, you know, just would crawl in a hole after mom and dad separate. A lot of people might crawl in a hole after dad dies at 43 years old, right? I've just never been that guy. You know, I've always kind of thought, you know, there's a greater purpose up there, and if it's over, it's over. Doesn't mean you're a bad guy. It might just mean you try it. You gave it your darndest, and that's just kind of how I've lived. That's how I've lived my life.
Do you think that was taught and learned? Do you think you were just born with that?
You know, it's a great question. I would tell you, you learn a lot along the way, but I think, you know, I've always been blessed with a lot of emotional intelligence, if you will, and I think that part of it. You know, you certainly, you know, being blessed with a great education, a college education, and went to Hillcrest High School. They had when I graduated, we were the premier high school in Texas. I mean, certainly from an educational perspective, learned a lot. But man, there is nothing like good old hard work. And I would tell you, and I've learned this from my mom's side and my dad's side of the family. I mean, they all were very hardworking people, had significant work ethic, and I grew up, you know, kind of in that scenario, and was really. I look at it today. I'm one of the hardest working people at Higginbotham. That's not me beating my own chest.
Yeah, you're like,
ask all my partners.
Put in the hours.
Yeah, and so but emotional intelligence, you know, is a good thing.
And when you say emotional intelligence, do you mean the ability to read people or the ability to know your own emotions?
I think all the above, right?
Okay.
Knowing what knowing things like, if I'm really great at this, but I'm not good at that, then I have the wherewithal to go, hey, I need to bring in a great partner that's really good at this.
You know your weaknesses.
That's right.
Well.
And don't beat I have a saying at Higginbotham, my partner and our CFO, Jim Krause, always reminds me when I might get on a tangent about something or specifically someone. He'll always say, well, you know, I had this partner that always says, don't beat people up on their weaknesses, but support their strengths. And I would tell you, I've had a knack for being able to identify that, hey, this partner's strength is X, but he or she has this weakness. And so what we need to do is help them find somebody that can help be the yin to their yang, if you will.
And doing it for yourself, too.
Oh, 100%. Yeah, 100%. Yeah. So, I mean, you're not superhero, right? You're really good at you have certain elements you're absolutely great at, or I would tell you, there's things I'm good at, I just don't like doing, and so go find somebody that's great. Like our chief operating, Mickey Shepard, I always say he's in charge of everything non-sales. And it's not that I can't do all those parts, because there was a time when I was the chief technology officer, or the chief financial officer, or the chief accounting officer, or the chief marketing
You're wearing
officer.
all the hats.
Yeah, or the chief HR officer, right? But those aren't the things I love doing. And he and his team are spectacular at doing those things. And so, I'm glad to have him on the team. And I always tell people, well, that's in Mickey's lap. And then he can guide you to his teammates to help out on whatever that scenario might be, an IT dynamic or an HR dynamic, or, worried about, expansion of one of our locations, et cetera, et cetera.
Mm-hmm. So you have this positivity, a vision. Here's where we're going. And then when things get hard, I'm going to hard work.
Yeah,
hard work is a big part of your upbringing, and sort of those are some of your superpowers.
Yeah, and I would tell you too, Jamey, just COVID, taught a lot of us a lot of things, right? I'm also a very patient person, and I don't panic.
Oh, really? You're a patient person?
I really am, believe it or not. Yeah, I know that's shocking.
That is not. I would not have guessed that.
Let me put it this way: when it comes to people, okay. I'm very patient when it comes to people, but I also don't panic, and I look at COVID as a great illustration of that. People, I mean, and by the way, don't blame them. I would be horrified too. I served as still the chairman of the board of All Saints, or president of the board, I guess. And I remember coming home to Molly and going, these poor young families. I mean, there's this unknown thing out there, and it looks like it's gaining momentum. Then they come home, and depending if they're listening to Fox News, they're getting this narrative. They're listening to CNN, they're getting this narrative. I don't know if they really know what the real truth is. They're trying to seek, advice and counsel from their physician. They don't know yet because it hadn't really been determined. Social media is out there, and depending on what Instagram post or Facebook post or blog you read, I mean, holy cow. And I just looked at my role during those times, both at an All Saints, at a Higginbotham, is just being the steady hand. Now, inside, I might be like that duck. On the surface, I look calm, and underneath, man, I'm just flapping my feet like crazy. But I just said, like at Higginbotham, I formed the COVID-19 task force. And we met once a week, and we just kind of listened at what was going on, and not only nationally, but statewide and locally. And we just weren't going to make any harsh decisions. And we just kind of tried to be calm, and kind of fortunately tied into some really smart people, both at Cook and the infectious disease side of the equation, and Texas Health Resources. I've got a great friend, Terry McCarthy, that's been chief of staff over there, ER, and fortunately for us, kept a wonderful dialogue going there. And our dear friend, Rick Merrill, who's a wonderful chairman and CEO of Cook, and he led us to folks within his organization to dial into. And at the time, I had served on the board in North Texas when I was on the board with Judge Whitley. So Judge and I would stay in tune in that regard. But the bottom line was, just didn't panic. Didn't jump to any harsh conclusion, but talked to a number of business leaders in our community. Hey, how are you handling this? What's that going to do, et cetera? And I think with that, being calm and being patient, we didn't make all 100% correct decisions, but most of our decisions were the right decisions.
You stopped to think about it.
That's right.
We got to think and make informed
That's
decisions.
right. And that's where the patience,
gut reactions.
Let's get together.
Yeah.
And by the way, I could see, I always laugh because I was probably the bravest or dumbest, I don't know which one it was, in our COVID-19 task force. And I remember our task force, they died laughing when I got COVID because I was the one. I wasn't bulletproof, but I was like, come on, that didn't apply. And when I got it, they're like, ha ha, you got it. So
that's funny. I want to talk about, you hinted on this, relationships, but it's particularly in the context of, so insurance is one of those things. I don't know that anybody loves insurance. Like, you love insurance, but like as a business owner, like, it's a necessary evil.
Yeah.
That I'm like, I don't want to pay money for that. I know I need that. So one, it's this thing that people, I think, intrinsically don't really like. It's like going to the dentist or something, or buying new tires. Nobody really wants to buy new tires.
Right.
So, and then two, my assumption is insurance is also priced. For the most part, it's like whoever gives me the cheapest thing is kind of who I'm going with. I say all that. You guys have had almost a 91.5% customer retention, which is bonkers.
Yeah.
In a thing that people don't really want and are pricing you out, like it's all, But you talked a lot about relationships earlier. Talk me through sort of your philosophy on customers and customer retention, and also even, in the very, very early days, y'all adopted, we need more than just this one thing. We need a lot of services under one roof. So take me through your philosophy on how you have sold insurance, and then how relationships also play a piece in that.
Well, great question. So, first and foremost, I've always just been a fan of, and I think this applies to any business, candidly, it's all about differentiation, right? And, early on in our journey, it was the differentiation was, hey, you're dealing with an owner, which is still true to this day. You're not dealing with somebody that's just getting paid a living wage. You're dealing with somebody that they care about the business doing well because their retirement, their long-term financial sustainability is tied to the business. And so once upon a time I was the president of the Southwest ESOP Association, and there's actually studies that showed productivity is higher when you have companies that are actually owned by their employees. And so I think that translated obviously to customer service. But even today, we took the approach of, we didn't want to just deliver a policy and then say, hey, we'll see you, a couple of months before renewal. And so early on, we started to build out what we called our day two services. And really the idea is no more elegant than this. Day one, our job as your insurance broker is to get you the best cost, the best coverage, and best cash flow we can find in the market. And because of our size, we have access to every market.
Yeah, you're not selling your own product.
That's right. We're finding you the best product. We're just shopping for you. And that's where size has been a good friend, but also in our mission, vision, and values, we always say we want to be, a true trading partner, the best trading partner, exceed expectations of our carrier partners. And that, if you think about it, it's a three-legged stool, right? It's you as the client, it's us as your broker, but it's also that insurance carrier. If they don't like us, guess what? They're not going to be really excited about helping you out either. So we get that best cost working with them, the best coverage, which you got to have really smart technical people that can really identify and go, hey, here's Jamey's business. How do we make sure we get him the right coverage so when claim time does come, we're going to attach, and then get the best cash flow option in the market. That's kind of where it stops for most insurance brokers. For us, it's all about also day two. So day 2 through 365, how do I engage with you to make sure we really can long-term help you control your cost, which again, you're not going to be happy about. Probably next to payroll, it's your second largest expense. And so we built out a pretty robust platform where on the property casualty side, we've got loss control representatives, claim representatives. We've got lawyers on staff for contract review. We've got data analytic tools. We've got risk management systems. On the benefits side, we've got lawyers to help navigate ERISA and all as Ross Carmichael that heads that up talks about the alphabet soup of ERISA, FMLA, et cetera, and all the ever-changing legal elements that are out there. We've got a wellness team that head up by a lady named Jim Spears that put wellness strategy in for NASA. We've got a communications department, et cetera, et cetera. And we provide all these services to our clients at no charge. We don't also charge internally for it. And our bet when we implemented this strategy robustly back in the late 90s was two things. Number one, our retention rate would go up, and we did. It actually this year is knocking on the door closer to 94% than 91.5%. Yeah.
Holy
cow. And then we saw our acquisition of clients, which we were already good at. You know, right now we're in the whole baseball world, right? So I'll use a baseball analogy. We bet 500. If we called on you year one, 500% or half the time we'd pick you up. That's actually jumped up to 3.6 out of 5 times. And so for us, we've really, that's been validation, and we were named one of the risk management firms of the year a couple of years ago for companies under a certain size because it just didn't exist in the marketplace. And so we've tried to, again, it's all about differentiating. On the front end, how do I make sure I've got people that really care? The ownership model gets you there. How do I make sure I've got some of the brightest and smartest people so they know how to really evaluate? And then how do we make sure we have the requisite services and support?
We're adding value.
That's right, to bring real value to that otherwise expense. And Mary Russell, who's been a great partner of mine, she's on our board. She runs our private client services on personal lines. I always tease her and send her notes and go, hey, is there anybody out there that I can hire to manage my personal insurance? The costs are going way up. And she always responds back very quickly and says, you've already dealing with the best. I've got to go take care of our other clients. Click. So,
that's funny.
So anyhow.
But it's just this idea of giving customers way more. We're delivering
100%.
more. One of my favorite, Chick-fil-A stories is, there's two ways you can give value. You can say, hey, I'm going to sell you this $5 sandwich for $2 or 99 cents.
That's right.
Giving value. Or, I can say, I can put it on a plate and sing you a song when I give it to you. But Chick-fil-A doesn't have a dollar menu. But you go in and their customer service is fantastic. They're going to say, my pleasure, things like that. But it sounds like y'all's model was, how do we increasingly give our customers better and better service?
That's right.
And give them more. And then also, so talk about the relationship side as well, just because I found an old article that was talking about just sort of your sales philosophy and just encouraging people to have centers of influence and making it more about relationships than out.
Right. Well, again, it just kind of goes back to where us being producing executives. If I'm sitting over at the 500 building and I'm not getting out and interacting with not only our wonderful staff, but also clients, I don't really know what matters, right? I might in my head start to develop these ideas of what matters. And I love, like the other day I had, same week, and I love when this happens, I had a prospective client come in. I also had one of our trading partners, one of our insurance companies come in. And the response from them both when they were leaving is like, God, I felt so welcome. And both of them were laughing. The insurance company, they're there. They're trying to, get opportunities to sell more insurance through us. But it was great from this prospect, who, by the way, hired us, which I was really excited about. That they were like, I felt welcomed. I felt high energy when I walked into the room. It wasn't like, oh my God, I'm here again today. And so, it just. I don't know. It's kind of a little bit of the Hig magic.
It starts with that. It's that culture piece.
That's right. It's just that culture, 100%. So I don't know. It's a great business, and we just have, again, great people that are there to serve others. Again, I think we certainly on the when we bring in some of our client relationship people. My partner Jim Hubbard coined this saying years ago. He called it the Thanksgiving test. And I remember we had a guy that didn't work out for us, and he came in just pounding the table at my office. And I'm like, God, Jim, what's wrong, man? And he goes, that's it, Reid. From here on out, it's all about Thanksgiving tests. And I go, the Thanksgiving test? What in the world is a Thanksgiving test? And he goes, if you can't have somebody over for Thanksgiving dinner, then why in the world do you want to have them as one of your partners? And, it's just been true to our hiring strategy through the years as we go identify new partners to join us vis-a-vis an acquisition. If we've got an insurance company that is, not there to really support us and it's painfully off on the front end, there's plenty of others that are out there. Let's go deal with them. I mean, it's again, back to that culture, back to that building a relationship, back about, it's just all about what I call that people dynamic. I just think it holds true, particularly in a business like ours, again, where the assets go up and down the elevator every day.
I love that. That's the Thanksgiving test. Would I want to have Thanksgiving
with
this person?
I mean, think about it.
Yeah,
unfortunately,
great.
Sometimes in my case, I have wonderful in-laws, so I'm not speaking to them, but, you could have in-laws where you're like, oh, God, it's the holiday, so.
Talk to me a little bit about, so y'all were organically growing pretty rapidly year over year. And then there was a point not too long ago where you started merging or buying other companies, which is probably a big change in the business model. How did you sort of make that decision? What was that like?
Well, it's a great question. So, we had brought in a number of wonderful firms along the way. The Thomas and Ryan companies, Eddie Ryan and Clayberry, and Doug Dickerson, Little, Fitzgerald, and Rodney Johnston, who was with Willis. I mean, there'd been a lot. Don Lance. I mean, number of great firms that had joined us. But it was interesting, kind of circa 06-ish. We had a lot of firms that, because we were really the fastest growing firm in North Texas, a lot of firms that had maybe not made a significant or built a large footprint in the state of Texas were looking to us and saying, hey, let's go buy these guys and then you can build it for us. And, maybe dumb but not stupid. I'm like, well, why would you buy me so I can build it for you? And that kind
People were trying to buy your business model.
That's right. Okay. And then I had the good fortune of serving on the Frost Community Bank Board, and it was real interesting. We always saw where they would just get opportunities because they were Texas based. It was that old, hey, Texans want to do business with Texans. And again, my great partner Jim Krause, he actually grew up in more the merger acquisition side of the business, is not only in public accounting, but then later as a transactional lawyer and working for a private equity firm. And he was always chomping at the bit. Man, Reid, God, we can build this, build and build and build and build. And so really we just kind of came to that decision that it was time for us to instead of building out the state of Texas for third parties, let's build it out for our state. So I launched what I called the Best in Texas strategy, which is to be the best place for employees to work, best client advocate, carrier partner, and community partner.
Again, a clear vision.
Very clear, crisp vision. And literally, Jim and I kind of locked arms, and we began to call on different firms throughout the state of Texas that I had great respect and admiration for, or other people within our firm said, hey, you need to go call on this and such and this and such. And we just began to tell our story. We didn't hire an investment banker to go out and do it on our behalf. We just did it on our own.
And were you buying them, or were you merging with them?
No, we in legal form, we'd acquire them. We always say externally that it's a partner, and this is why I say that, Jamey.
Because it's employee owned still.
That's right. So what ends up happening is the firm we acquire ends up having to take a portion of their proceeds and buy our stock. Then every one of their
that's interesting.
Yeah.
So you're giving them money. I'm buying out an owner.
That's right. But they're gonna round trip some of those dollars back and now be a shareholder with us.
So they still maintain skin in the game.
That's right.
And they're betting on
They're betting on.
They're betting on y'all are going to keep growing.
Right. So creates an instant alignment, right?
So it's a longer term play for them.
That's right.
Versus a quick
They
cash.
may decide to hang up their cleats, but there'll be a definitive perpetuation plan in place before they do. And now they've got dollars at risk if we don't do it well.
And if it does well, they're gonna make
it does
more
well,
money.
they'll be great. If not, it can go the other way. So creates complete alignment, and then every one of their employees, we always honor their hire date for them.
Mm-hmm.
So if they if they hired on, great firm Stahl just joined us in Florida. If my start date was January of 1990 with Stahl, then their start date with us is January 1990 as well.
Oh, wow,
and so they immediately begin to participate in our, we call it Higginbotham incentive grants, but that's where just by working at Higginbotham, you begin to accumulate interest in the company. And so they automatically become a shareholder, and that's might be unique to the culture where they came from. So now they're also completely aligned with us doing well.
They probably weren't owners in the company.
Typically not. Typically in smaller firms, unless they had an ESOP as well.
Yeah.
And typically in firms, I shouldn't say smaller, but firms that maybe aren't our size, typically wouldn't have the ability to not only buy stock, but participate in synthetic
so you
equity
get
as well.
Very quick buy-in from their team.
100%.
They're probably more excited. They're like, I would assume as an employee, if your company's getting sold, you're kind of, this is sad.
Yeah. And they're always worried.
My owner just sold me out.
Oh, yeah.
But with this, they're now getting ownership.
Yeah. And think about it. We've probably, I'm probably not wrong on this, we've done north of 100 transactions, be it acquiring a book of business, be it acquiring a producer.
Y'all have acquired 100 businesses.
Yeah, or acquired an agency since 2007. So when you spread
That's
that out,
so many, Rusty.
yeah, but it's
100,
10 or so, call 8 to 10 a year, right?
That's
but
crazy.
We've done that, and we still only have 7% turnover. Think about that. You normally read, you acquire a company, and then 60 people are let go, 100 people are let go. Like I read the other day, 6% of the workforce is being let go. The beauty of growth is that we always need great people, and we're not trying to buy a company to rationalize their expense side of the equation. We're trying to buy that firm and enter a new market, and then teach them how to grow the way we grow. And so the upside is really wonderful when they join us. And it's great not only for them now as a shareholder, but it's mutually great for their team.
Did you have to go raise money to do that? Did you take on more debt?
We kind of created a debt facility and brought in a minority capital partner to help us.
So you brought on capital.
Yeah.
Because to do it that aggressively.
Yeah, but it's worked out great. We've got a great long-term. Matter of fact, this is kind of unheard of in the world of private equity, but we have a minority capital partner by the name of Stone Point Capital, and they've been our partner literally since 2009, which is just unheard of.
And is that when you started doing that?
Actually started in 2007. We started with another group, Allied Capital, and they're a great example of somebody that got kind of in a little bit sideways, if you will, when the modern day depression hit or the Great Recession in 2008. So we successfully bought their interest out completely.
So in 2008, 2009, when the world is crashing, you're going and raising money and saying we're buying more.
That's right. That's right. And we wrote checks too. We increased our interest. So we make sure that we would always be in a control position.
Yeah.
The employee group would always control Higginbotham.
But did you know how did you know how to do that and structure that? I mean, you had never done that before.
We'd done it. We kind of did that back in '89 when we bought the company with an ESOP, and we did it again in '07 when we brought in Allied Capital as a minority partner. So we'd been down that path a few times. The bad news, we were doing that in what was probably the worst time in American history. But I will tell you this: when you're a great company, all that is just background noise. When you're a great company, and Higginbotham has been a wonderful performer for a long time, you can raise capital. It's not a difficult thing to do.
But you had this formula where, like, when we bring people on, when we take care of our employees and brings people into this model, it works. It's like
That's right.
It's like lightning. So
That's right.
You had this sort of snowball effect.
Yeah.
Of it kept working and kept working and kept working. That's incredible.
Yeah. Yeah.
You have done over 100 of those.
Yeah. And I will tell you, I mean, it's for the firms that we've acquired. I mean, we've not had anything blow up either, which is great.
What's your retention rate again?
I'm sorry?
What's the retention rate again?
So our employee retention rate, or say it a different way, both our voluntary and involuntary turnover is only 7%. So it's de minimis compared to really any industry, but any business, particularly our size. It's crazy.
It's got to be.
I always challenge our chief people officer, who is also our chief operating officer, Mickey. I'm like, "Are you sure?" Mm-hmm. And he's very analytical. He'll break out the reports.
Yeah. When is the book coming out?
Yeah, I know exactly.
You need a book on the Higginbotham model.
Well, it's funny you say that. So my kids, Sainty, Jake, and Charlie, I mean, they're always like, "Dad, you got to write a book. You got to write a book."
You need to.
And I'm like, it's too boring. I don't know if anybody ever read it. So
man, just some wisdom and some great business principles. So let's pivot. That's a good segue.
Yeah,
I wanted to ask you about this. I don't know your sons, but I know Sainty. And I'm a big fan of Sainty, and I've taken a deep dive into her story here, and then we've done some marketing stuff with her and Eric. But her experience, you know, as a young, I want to do acting, go to New York, and all the, you know, this kind of crazy foreign thing for parent in Fort Worth, but just over and over again, it was just this testament of how supportive y'all were of her chasing her dreams, which are probably these kind of wild, little scary dreams for your daughter to have. Can you just talk me through just some of your like parenting philosophy and juggling families? You know, so you're building this empire, and then you're also juggling your family, and you're very supportive of your kids. What? Just give me some Rusty wisdom there.
It's funny, and I'll talk specific about Sainty. So she started at Casa Mignano, I think when she was like 4 years old, and it was actually, for me, it's great because I do work still the state a lot. And, what would be fun is Molly would drop her off at Casa. And typically when she was in a show, which she was in a show all the time, they would do during the rehearsals would typically run from 6 to 9. So she'd drop her off at 6. I would turn around and I'd be there every night to bring her back home, hear how got to actually watch. Typically, I'd probably show up somewhere between 7:30 or 8. Mm-hmm. So I get to watch a little bit about what they were learning that evening for whatever production or performance they were doing. And, and so with her, specifically, it was just always remaining engaged, and it was fun. I mean, she was good. Casa, as you know, is really a professional theater. Not everybody gets the blue ribbon, so you have to audition to get into the shows, et cetera. And so it was really fun to watch her as she was growing up. You just followed through high school. I mean, it was hilarious because, she went to All Saints, but then All Saints at that time didn't have a theater program. So she really kind of went to Arlington Heights, who at that time had, and probably still does have, a great theater program. And Molly and I always laughed because she was like cheerleader by day and musical theater by night, which was just fun to watch. In particular her junior year, when I guess the baseball team made it all the way down to the state and unfortunately lost the state championship. I mean, just rallying and following them. So, but with her, I mean, I'd remain as much as I could during the weekdays, but I always try to, and I'm still this way to this day. Weekends are for my family, period, end of story. So I might work 60, 70, 80 hours a week during the week, but I'm not gonna jeopardize being there and being part of the family for the weekend. And when both boys, Jake and Charlie, came along, they, as you can imagine, they played every sport that you could imagine. Oh yeah, from baseball to basketball to football, and we had to do a lot of dividing and conquering during the years. But I would tell you, it just for us, as our family, they brought such joy. I mean, they were, fortunately, Sainty was good at acting and dance and cheer and all that kind of thing. And then Jake was great at basketball and football and baseball. Charlie was great at basketball and football and baseball and track. I mean, so, I always laugh and say that it would have been really a tough thing to do to watch, even though we'd been there cheering on if they weren't good. Fortunately, they were good. But Molly and I both were very committed, and I would tell you, her family set a great example for us. I mean, her mother and father. I mean, to this day, they were going to see her brother's grandson, so it'd be their great grandson, go to a T-ball game this weekend. So, talk about leading by example. We always saw them so engaged with their family and whatnot. And, when you do that, then you can build vacations around that. You can do a whole lot of things. Growing up, when the kids were growing up, we had a home down down at Granbury Lake, and that would be Granbury Lake Central, So if there were baseball games or Sandy had shows going on or the boys had tournaments going on, we would all start there, and we'd bring down their buddies and friends, and we'd again divide and conquer to figure out how we could be part of their lives, and that was the thing. I mean, we always have been part of their lives. We never went off and did just vacations, just Molly and I, quiet time, and I don't regret it at all, by the way. I mean, I loved being with our kids, and we just found that was the way to do it. And as they started to develop their families, we just kind of put them under our arm and said, hey, we're going to treat them like our own kids and continue that momentum. So we just always been engaged. I mean, I remember, again, you started with Sainty when she kind of had this vision of pursuing, acting beyond, high school. She had this list. I mean, very organized, had done all her research, and there were like 16 schools she was wanting to go see. All of them, by the way, required auditioning just to get into the theater program. And I mean, I'm looking at this list. I hadn't even heard of half of them, 3/4 of them, right? And I was always the one, I think it made Molly too nervous. So I'm like, okay, I'll take her every weekend. We just would go tour these schools and go audition. And, fortunately, she landed on Baldwin Wallace College, which set a whole great journey for her. But anyhow, it's just something you just kind of do. It wasn't that I had the time necessarily, but made the time because it was just important.
You made the time.
That's right.
You were present. You were there. Which is it doesn't happen on accident.
No, you got to be intentional for sure.
In that sort of sentiment of time, how do you personally? I don't know if you rhythms now or rhythms and habits back then, but you're working 60, 70 hours a week. Then you're here for your kids. You're every weekend with them. You're a present parent. How did you personally, stay grounded, stay rested? Were there any how did you take care of yourself, or how do you take it even today? Like what is
it's funny. I mean, back then, I think I became a member of YPO in 2000, Young Presidents Organization, and really YPO was all about it's about your family and it's about your business, and so it really helped me maybe departmentalize. I need to be thinking about these three things, and if one gets out of whack, maybe get it back in line with what it should be. Now, that being said, growing up in a broken family, I was darned and determined to make sure that I wasn't going to repeat the cycle, so to speak. So, I kind of was very intentional about it. But I mean, really to this day, you reading my bio made me kind of tired. I thought, oh my God, this guy, what is he doing to himself? But I really have always been about, staying very grounded with my family, staying very grounded with, obviously Molly, my wife, and, Higginbotham kind of takes up my day, literally kind of during the working week. And not that we don't have moments over weekends we have to get engaged, but I still to this day, very focused on family first. And by the way, I encourage all my partners that way too. I mean, if our values at Higginbotham say family, it's just not by happenstance, right?
Mm-hmm.
It's interesting. I had a chance to visit with Coach Sonny Dyke, and his learning kind of his practice schedules, and a lot of that is all geared around kind of family. So, you have this block of time, and you just kind of figure out, how do I make sure I manage it so something doesn't get left behind, right? And it's just kind of what I've done. I still do it to this day. I would almost say, if in that YPO scenario, it's obviously family first, Higginbotham next. I'm probably third on the list,
Okay.
but I do take good care of myself. I try to exercise. I try to, eat healthy, maintain my weight, and whatnot. And so it's not that it all comes easy, but I kind of try to prioritize in that regard.
Yeah, that's great. That's great. Are there any books or resources or like was there anything that was really instrumental for you, sort of in your leadership and running a company? You've said a lot of people. You've had a lot of people.
Yeah,
that have influenced
I've
you.
probably been more about the people educational side, and then if it's something I want to dive into, then I'll go find the requisite publications to read up a little bit more. One thing that I've never been a huge reader, just because, truth be told, time.
When
I mean, there's only a certain number, so much time in the day, but I'll and Google isn't it a great thing? I'll be thinking about something, and I'll try to Google it, and boop, something will pop up, and then if I can get the Cliff Note version, that's great. I love documentaries, so if there's somebody that I'm fascinated by, I'll watch a documentary to learn more about how and why. Fortunately, but it's been really, I would tell you, my education has been more trying to be really a student of people, and really, again, more in line of that emotional intelligence and development. And it was interesting. Early years in my YPO journey, I had a lot of folks that were much older than me, and they provided phenomenal advice and counsel on stuff. And now it's like the tide's turned. Now I'm the old guy providing that advice and counsel to these young entrepreneurs that are going, oh my God, I've got a tiger by the tail. What do I do? I've got a wife, and I got a young family, and how do I manage and balance, and blah blah blah. So, but anyhow, it's been fun. What gets me up in the morning, Molly hates it. Unfortunately, Jamey, I wake up just like this. So, and then I just crash and burn at night. When the switch is on, I'm on, and then it's just completely off.
I love that.
Yeah.
I love that. That's a great mental picture as well. I can see that, like the Energizer Bunny. What was I? If you could go back to your younger self and give any bit of advice, back to 1985, or what would you go tell your younger self?
I don't know, really. I mean, that's a great question. I'm trying to think. Probably I wasn't maybe as patient early on as I am now about letting things somewhat unfold. I think when you're younger, your ego is such that you're scared to be vulnerable. You're scared to really ask advice, for people might think you're weak or whatever. And that's just maybe during my time of building a career, that might have been more prevalent than it is today. But I would say definitely that you got to be patient. I think that's the other thing. It's funny. I had a chance to mentor some MBA students at TCU, and they're all smart. So these are the guys and girls that are in the entrepreneurial studies, and they're all going to be gazillionaires, right? And one thing I've always, and I fell into it, in all fairness, I fell into something I'm passionate about. I mean, I'm passionate about people, and I found an industry that lets me interact with people, which I love. I mean, that's the root of why I'm able to do what I can do. But that's the other thing. I think sometimes early on in your career, particularly, if you're just starting your career, or you've gone back getting your MBA or whatever, higher education, don't lose sight of passion. Passion is what, at the end of the day, when you're in a business environment, you're going to have bad days. And when you have those bad days, what's going to pick you up to turn it into good days or give you the energy to keep forging ahead? And it's you got to have the passion. And it was interesting. I remember this young man at this entrepreneur studies deal. He was talking about how I'm just going to make a lot of money. And I'm like, well, let's dive into what you're passionate about. And he was passionate about more traveling, loved photography, loved all of that. And later on, I discovered that that's what he did. He kind of built a boutique practice in and around serving really high net worth people. So it wasn't about them having to pay him a lot of money to make their experience unbelievable. And he's getting to travel. He's meeting a lot of well-to-do folks that are really treating him because he's taking such great care of them and has built a boutique practice around that and probably doing financially extraordinarily well. And versus saying, well, I'm going to go buy a business because I wrote my thesis about it and I'm going to make my first $1 million there and then I'm going to flip it into my next, my third, my fourth, my fifth.
Do something you're actually passionate.
Yeah, I mean, and I, it's very interesting. And I'll, again, focus back on YPO. I know a bunch of people that, if you're done with your business and you don't have the passion, then, you should sell your business, make your lick and move on. But then there's also so many people I know that sold their businesses. And when I ask them, do you regret it? And the answer is, yeah. I mean, it was a financial transaction, but I oftentimes think, what would it look like if I'd have just stuck with it? And so, I'm blessed to be in a business that I love to be part of, and we've got a great capital structure. I always call Higginbotham that legacy asset that talking about Saney, I hope Molly Morgan and her brother Mick and our little granddaughter Jamey or JR, our other grandson. I mean, I hope it's a business that's around for them. And if hopefully we built it foundationally, that it is sustainable, not only in terms of the structure of the business, but the people dynamic of the business, that it can go well into the future. And, that's if you've got passion about it, then it's easy for you to jump in and make that happen.
Yeah. Well, your passion is palatable. I mean, it's contagious. About the way you talk about the company and the culture is inspiring.
Yeah. Thank you.
That's great advice. So, final question: just what is next?
Well,
what is next for Rusty Reid and next for Higginbotham?
As I was toasting our employees at our HLC, our Higginbotham Leadership Conference in April, I did that old simple trick where everybody stands up and then had everybody sit down, except for there was 35-year-olds still standing. And I'm like, the next 25 years, Higginbotham will celebrate its 100th birthday. And candidly, at that time, at that celebration, I will be 85. I hope I'm not the chairman. I hope I'm maybe executive chairman. I surely don't need to be the active chairman or CEO. But I looked at the room and I said, it's now all up to y'all to now take the torch and carry it forward. So I hope I'm there as a guest and somebody's going, oh, don't go sit by Rusty because he'll start telling stories. I obviously hope I'm still alive because I do love life. I can't wait to watch my grandchildren and my kids, adult children, I should say, see where that takes us. And, Molly and I can sit back and just enjoy life together, where it takes us from that point. But, for right now, and certainly the next decade, I'm charging hard to continue to build Higginbotham as being one of the best firms in the country in what we do, but not just firms specific and around insurance, being one of the best businesses in America. And a lot ahead there. But I also want to make sure we continue to give back. This year we've gotten a lot of wonderful press because our Higginbotham Community Fund, which our employees support, have given a number of dollars away into the community. Mayor Parker gave us a nice proclamation. When we had our HLC, we literally had 500 volunteers, thanks to Priscilla Miller, who's over everything locally, and really our Higginbotham Community Fund. We had 500 volunteers go out and support 12 wonderful causes in our backyard. The mayor gave us great accolades for that.
Yeah, that's cool.
So I hope to continue to not only build a great business, but that business allows us to really give back to the communities that are so supportive of us.
Mm-hmm.
So I don't know what that journey looks like, but I know it's still ahead. It's ahead of us, and we'll continue to have a lot of fun with that as well.
I love it. Well, y'all have made a big impact just in the community, in the city. I know the Net y'all have supported them, and just from the stock show and rodeo to all of it, you guys, your employees raised over $6 million, right?
Oh yeah, and growing. So
y'all have a fund where
we have a fund that's literally funded by our shareholders and funded by our employees, purely volunteer. So it's not as if we come shake you up and down and come on, Jamey, give us some more money.
That's incredible, though.
Yeah. So it's been incredible. I mean, it won't take too long for us to ultimately get to $10 million. And what we've done thus far is almost every dollar that comes in, we try to turn around and round trip it. Every office basically has a say in where those dollars go. So it's not the only requirement is you got to give to the fund if you want to make a grant request. And quarterly, those grant requests come in, and we try to meet what those requests are. And if we don't get it this quarter, I always tell people, don't lose hope. We'll catch it next quarter. But it's been a wonderful part of who we are. One of our dear late colleagues, Tracy Jackson, I remember came into my office one day and said, I want to give to who I want to give to. And at that time, I was on the board of the Community Foundation North Texas, and we just kind of put the two dots together, funded it with literally only $50,000 back in 2011, and now look what it's done. And it'll keep going. So it's really exciting to know that again we've got. But it's back to that servant leadership. I think our employees see myself and other leaders of the business, and there's something they rally behind. And we've got all these new faces all throughout this 16-state footprint, but it's something that they have in common as well. So it's just a neat part of who we are at our core.
I love it. It's inspiring and just big impact in the city. So y'all are in 16 states?
Yeah, 16 states.
You passed the best in Texas.
Oh, yeah. Well, back in it's crazy. Back in, I don't remember, it was 2017, 2018, we kind of launched what I called the best in the SEC, because one thing that growing up with my wife, Molly, her family's from Mobile, Alabama, and I grew up, since 1981 going to Mobile and really getting to know great people in the South. And so we thought we'd have a little fun. We looked up and we found ourselves in Atlanta, and here we are in Texas, and I'm like, what's in between is the SEC.
We got to bridge that gap.
We got to bridge that gap. And so we really got intentional. And again, thanks to my partners, David Fischel, who's our new partner officer. He, myself, a guy named Wes Snow, and Jim Krause, and we've knocked on a lot of doors in that footprint, but we've made great progress and real big presence now in Georgia and Alabama and Florida and Tennessee and Alabama. I mean, it's just fun to watch.
Wow. Well, Rusty, what a legacy. This is cool. I have enjoyed this conversation.
Well, likewise.
So many good nuggets.
I'm not near as excited as Eric and Saney, so they have a much more fun life to talk about than mine.
They do a fun life, but man, just as a business owner and leader, this is, so many pieces. I think probably the biggest takeaway is just the culture piece has fueled it all.
Yeah.
This take care of your employees, create legacy for your employees.
That's right.
Take care of them first. It's just what a neat model and neat company you've built. So, man, I'm thankful to have heard it. Thanks for sharing it with me.
Yeah, no, absolutely. Thank you for having me. Enjoyed it.
Congratulations, you made it all the way to the end. Thank you so much for listening to this week's episode of Stories with Soul. If you enjoyed the interview and like what you heard, please help us out and share, subscribe, and like anywhere you listen to podcasts. When you share and subscribe, it is insanely helpful and allows us to keep producing new episodes. You can always join us directly in the studio by watching the video version on our website, 6thAveStorytelling.com. Stories with Soul is brought to you by 6th Ave Storytelling, an organic marketing company building standout brands on the foundation of story. You're obsessed with your business, and we want to make the world obsessed with it too. Thanks for listening.